one or two variables drive your computation. Your computation is being driven and dependent on one or two variables. You will need the goal seek command and you will need the Excel data table. Let's see how you can run scenarios in Excel, what Excel calls the what if analysis, using the goal seek and the Excel data table. Let's get into it and I hope you enjoy. Remember, like, share, and hit that subscribe button.
Many people will try out a certain business in their lifetime. A business will have fixed costs, variable costs, and then you have established a selling price. Then you have to sell a certain number of units and then generate a profit. The total revenue will always be selling price times the number of units. The total cost will always be the fixed cost plus the product of variable costs and the number of units that you generate. The profit will be total revenue minus total cost. Any business, when it is starting, will always start in a negative profit because you have incurred fixed costs and yet you have not sold any substantial amount of goods for you to generate enough revenue to give you a positive profit. Let us see how business decision can be made and how Excel can be useful in making those decisions. Every business is created or started to generate profit and income. However, a business will rarely start earning a profit from zero. You have to incur fixed costs, you have to incur variable costs. These are fixed costs, are costs that have to be incurred irrespective of whether there's production or not, and variable costs per unit. These are the costs that the business person incurs only when they are producing a unit of a good or a commodity. Assuming you have a selling price and assuming you also have the number of units that you are generating, which are 15, let's see how you use a goal seek function to establish the number of units that would give you a target profit, for example 15,000. How do you do it? Under the data tab, you go to the what if analysis and you go to the goal seek function, and then we want to be able to set the profit, which is in B10. Let's click upward arrow, click in B10, click downward arrow. What do you want to set the value to? 15,000. 15,000, what do we want to change for us to be able to achieve this 15,000? We want to see how many units we need to produce for us to achieve that profit, which is the value in B5. Let's click OK. So when we press OK, you find that you have to generate a minimum of 833.3 units of a good, approximately 834 for you to generate a profit of 15,000. What else can the goal seek command help a cost accountant? As a cost accountant, you want to establish your break-even point. The break-even point is a point at which you will produce and change your profitability from negative to zero. So let us see, suppose you are in a negative and you want to see what is the minimum number of units that you have to produce and sell for you to change from negative profit and start earning positive profit. This forms your profitability threshold, and let's see how you can do it using the goal seek function. Similarly, you go to the data tab, go to the what if analysis, click on the goal seek command, and we want to set our profitability, which is in B10, to a value of 0, and we want to do that by changing the number of units. And when you press OK, you find that at minimum the business person has to produce and sell 334 units for their profit to change into a positive profit. I hope you find this helpful. Further into business decision making, you may have a pricing decision to make. What price should I charge? Should I charge 35? Should I charge 30? Or should I charge 40? Or should I charge within the range between 30 and 40? I want to see how my profitability will change. Likewise, the profitability will change at a certain price based on the number of units that you're able to sell. Let us see how we can run a scenario that looks at how profitability changes by producing and selling different amounts of goods and then by selling at a range of prices. Remember, we can only run this scenario if we have already done our costing. We have the fixed cost, we have the variable cost, we have the selling price, and then the number of units, and then we have a number of units, and then we have total revenue, which is a multiplication of the number of units times the selling price, and then we have total cost, which adds the fixed cost and then the variable costs, but variable cost after multiplying by the number of units, because for every unit you produce, a variable cost is incurred. So you get the number of units, you multiply by the variable cost per unit, and then you get that product and add it on the fixed cost for you to get your total cost. And your profit will be revenue minus cost. costs. Now, the starting point of running such a scenario using two inputs is one, we want to run a scenario on profit, and the profit has already been calculated. So you get the intersection. First of all, you put your selling price, which is scenario 1. Then you also have your units of goods sold, which is scenario 2, and you want to combine the two scenarios. At the intersection of these two scenarios, the column and the row, then you have this cell. In that cell, you input a formula that links it to the target profit that you want to compute. So you put equal signs and you say equal to B10, which is profit. With that done, then you highlight your table from this intersection cell up to the last cell, and then you click on the data tab and you go to the what if analysis and you click on the data table. The data table asks you, what is your raw input cell? Our raw is rot column. Rot column has selling price. The selling price is in cell B4. And then it asks you, what is your column input cell? The column inputs in our scenario are the units sold, and the units sold are in cell B5 in our computation. So what Excel is asking you, it wants to link the scenario you are running with the calculation you have already done. And then when you click OK, you would see that it will actually give you profitability levels depending on the selling price and also depending on the number of units sold. So for example, if you sold 3,000 units and you're selling at a price of 40, you would get a profit of 95,000. However, if you sold 3,000 units and you sold at a price of 30, then your profitability would be 6,500. Remember, for you to do this scenario analysis, you have to have your computation done, and then your scenarios in the rows and the scenarios in the columns in your computation should be inputs. In other words, they should not be generated using a formula. And that rule also goes to the goal-seek function. With that done, when you highlight the table from the intersection cell that you have already linked to your target profit, then you come to what if analysis, do data table, and then you input your raw input cells and column cells and press OK, and you will have your scenario run on profits. For example, check here. This cell intersection of that price of 35 and the units of 15 is actually what we have here. So it actually means that if you only sold 15 units at a price of 35, you'll be in a loss of 9,550 currency units. Let's highlight it for you to be able to mark where it is and how it links to our computation. I hope you find this lesson very useful, given that in your life, you're likely to have done a business, or you are likely to do a business before you leave this world. Enjoy the power of Excel and learn with fun with upscale analytics.